Cryptocurrency markets crashed between last November and January of this year. Even several of the biggest cryptocurrencies based on market cap plunged more than 40%. The worst might have seemed to be over headed into this month as many digital tokens bounce back. But geopolitical concerns caused the rebound to come to a screeching halt. Here's why the Russia-Ukraine conflict could cause another cryptocurrency crash. US President Joe Biden may issue an executive order next week directing various government agencies to closely study cryptocurrencies and central bank digital currency, or CBDC, according to a report in Yahoo Finance. Meanwhile, due to uncertainty and tension regarding a full-blown war breaking out at any moment between Russia and Ukraine, the global crypto market tanked sharply. At 8:37 a.m., the global crypto market cap was down by 6.56% at $1.86 trillion. The crypto trading volume increased by 25.64% at $87.52 billion, as per CoinMarketCap data. At first glance, it might seem that the situation with Russia and Ukraine has nothing to do whatsoever with cryptocurrencies. After all, most digital tokens wouldn't experience any direct problems if the conflict worsens. However, when the overall environment appears to become overly risky, many investors prefer to move their money into assets that offer more stability and safety. This is sometimes referred to as the risk-off trade. A risk-off scenario began to unfold in late 2021, even before the escalation of tensions between Russia and Ukraine. It's why both growth stocks and cryptocurrencies fell significantly in recent months. But the prospects of a conflict that escalates beyond words would likely especially make investors jittery. The potential aftermath of economic sanctions and increased global tension won't help matters either. Though Ukraine is thousands of miles away from us Americans, it may very well be the epicenter of the next major global conflict. Per the week, tensions between the US and Russia, which allegedly seeks to invade its neighbor over broader security concerns, have taken their darkest turn yet. If Russian President Vladimir Putin gives the green light to invade Ukraine, the US would have zero choices to respond severely. Personally, I believe in such a scenario that American forces will somehow or another direct engage with Russian troops. It's not so much about Ukraine, as it's the credibility of the US at stake. Should Ukraine fall, Taiwan wouldn't be too far behind because why not? If the US demonstrates weakness, then the Chinese will also do what they want. Although it's a low-level concern, should tension escalate into armed conflict, then Shiba Inu will learn a very tough lesson. And that would be this: centralization doesn't mean squat if world powers destroy the stability of centralized institutions that give decentralized protocols their power to begin with. In the most extreme sense, Putin holds a gun to the head of developed nations whose citizenry can afford such frivolous pursuits as investing in Shiba Inu. Yes, you can decentralize yourself through a virtual environment. However, with one pull of the trigger, it'll be game over for the user, both in the digital world and the real one. Stated differently, I appreciate that Shiba Inu developers are attempting to build new paradigms in the metaverse, but to enjoy this digital ecosystem, users have to be healthy, both physically and financially. For some people, Putin threatens both aspects. If there's another lesson to be had about Russian belligerence and its impact on Shiba Inu, it's this: real land trumps digital land. I don't need to explain myself at length. Simply, real land is a limited attribute, whereas its digital counterpart is theoretically limitless. Look, if Putin thought the metaverse was going to amount to something, why he could just craft a bunch of digital Ukraines and annex them one by one. But to him, it's probably all nonsense. He knows that real power comes from exploiting real people in real territory. Perhaps most alarming of all, when Putin roars, the markets shake. The same cannot be said about whatever happens in the Shiba Inu ecosystem. Therefore, think carefully before participating at this juncture. There are some important things that investors can learn from risk-off environments of the past. For one thing, they don't last forever. They can also present tremendous buying opportunities for assets that are well-positioned to come back strongly. Different investors will probably have wildly different opinions about which cryptocurrencies are most likely to bounce back the most once the crisis is over. A good case could be made, though, that the cryptocurrencies with catalysts on the way should be in the best shape. Ethereum, for example, is slated for a continuation of its major upgrade, formerly known as Ethereum 2.0 this year. Shiba Inu investors anxiously await the launch of Shibarium Layer 2 solution. It's also worth noting that some crises never actually materialize. Perhaps that could happen in this case. The stakes are high, and not just for cryptocurrency investors. Bitcoin, the digital asset most often referred to as an alternative to gold, plunged 8% within hours of Russia invading Ukraine, with prices tanking to $34,413 per coin. Ether, the native currency of the game-building blockchain Ethereum, has crashed 7% to $2,404 per unit. Ethereum rivals Solana, which is popular among NFT collectors, tanked 10% to $83 too. Even Shiba Inu, a meme coin that enjoyed logic-defying 49 million % growth last year, sank 10%. According to market tracker CoinMarketCap, the total crypto market lost $160 billion of value in the past 24 hours, plunging 10% since the Ukraine invasion began. According to experts, the global market's appetite for high-risk and speculative assets dropped as a potential geopolitical war seems to be back in place. Between Russia and Ukraine, Ether and other major altcoins have retraced as well. Investors are most likely seeking for less risky assets at the moment. Of course, crypto isn't the only asset that has tanked on the news of Russia's invasion, or even in the build-up to the event. Europe's benchmark Stoxx 600 index dropped 2% after opening Thursday, while analysts expect the S&P 500 index will trim 7% in weeks to come. But the fact that crypto is falling in lockstep with other assets is counter to Bitcoin's identity as a safe haven. Sensex also fell 1,640 points to 55,585, and Nifty dropped 490 points to 16,572 in the morning session. Though crypto is seen as a hedge against global uncertainties, the current downfall indicates the reversal of the trend. Bikram Subaraj, CEO of Gyatis Crypto Exchange, said, "The panic sell witnessed in the markets today is an expected reaction to any global crisis. The key thing to note is that the fundamentals of the crypto asset class haven't changed. While there is a possibility of further declines, the asset class is expected to absorb large volume buys beyond another 20% drop. Taking history into perspective, when the COVID-19 pandemic hit, we witnessed one of the biggest crashes in stocks and crypto. However, both assets recovered to new all-time highs in the next 18 months. Thus, we believe the current crisis also presents an opportunity to invest in these assets at a lower price." CoinDCX research team states that while crypto has historically moved inversely to traditional markets, in the case of the start of the COVID pandemic that triggered Bitcoin's 2020 rally, this developing trend could be an indication of the maturation of the crypto sector and its growing position in mainstream finance. With no end in sight for the ongoing geopolitical conflict, the traditional market and the digital asset sector may face extended uncertainties in the road ahead.